It's time to get up, get out, do something. Wake up with Jeremy Grunin. Be a part of the show. 732-505-1160. News Talk Radio WOBM AM 1160 and 1310. Listen online at WOBMAM.com.
Hey, welcome back. Wake up with Jeremy Grunin. It is 7:10 in the morning, Thursday, November 3rd, 57 degrees, getting up to 78 today. WOBM AM 1160 and 1310 News Talk Radio. Stream live on the Radio Pup app at WOBMAM.com. 732-505-1160. Join the conversation. We are now joined by our financial guru, Sean Monohan. Sean Monohan offers securities and advisory services through Commonwealth Financial Network. Member FINRA, SIPC, a registered investment advisor. Good morning, Sean. How are you?
Good morning, Jeremy. How you doing?
I am good. How did it feel, first of all, walking in the building like a baller?
Oh, just walked right in, the key fob. I don't have to wait till the commercial break to have Zach come down and get me.
Yeah. That was nice.
It was kind of a little letdown. There was a guy coming in here. There was a guy walking in, and I walked in behind him, so I up to the fourth floor, so I didn't actually get to use it here, but yeah.
Oh, I'm sorry.
But I did get in downstairs, which is the main thing anye.
Oh, nice.
Yeah, I feel like I'm climbing up the food chain a little bit.
You really are. I mean, this is like a big day for you all the way around because your Cubbies are World Series champions.
The Cubs won. You didn't stay up and watch that, huh?
I made it till 6-3. Probably in the no way. Really?
Right.
I got to get up at 4. No,
I hear you. I was thinking, I get up relatively early today too, but I didn't want that series to end. The whole series, I was like, man, this is great baseball. And then about midnight last night, I'm like, this series may not end. It's 6-6. They're bringing out the tarps. I'm like,
right.
We might play. My wife's like, are they going to play it tomorrow at noon or something? I'm like, I don't know what would happen if there was a big storm.
Seriously though, 3-1 down, you're thinking it's over, right? Especially with the last two games in Cleveland.
Over.
Yeah.
Right? I mean, it was over. How did they? I mean, there was but great teams.
Yeah.
Big athletic guys, strong guys.
Yeah.
I don't know if you saw that guy Baez, the second baseman, who bunted there and almost blew the whole thing.
Javi Baez.
That guy's lefty.
Yeah.
He's lefty. He plays Major League Baseball, throws with his right hand and everything. He is a natural left. Eats and writes with his left. I mean, what a athletic.
Oh yeah, no, he's
freak,
he
right?
is.
I mean,
well, and if you know Javier Baez, I mean, he came up when he came up. He was like the hottest prospect in baseball, right? And then he was playing shortstop, and then they tried him at third, they tried him at first, they tried him everywhere. Now he's like a Gold Glove caliber, like outstanding second baseman.
Right. So he's a good tagger because he tags hard with his left hand.
Yeah,
so
he's struggled to hit in the series, but he had a big home run
yesterday.
And
did you see the highlights? He bunted?
Yeah, where he tried the squeeze or whatever with 2 strikes. Yeah. But was that called for?
It had to have been. Yeah. Had to have been. Nobody would voluntarily do that.
No, right? Because that would be like you get
yeah. You're not playing. Yeah.
But they but that almost went beyond under the radar because they followed up with a hit after that.
Right. That guy got out.
Oh, they did?
That guy got out.
He did? I thought
he was on third with 1 out.
Oh, I thought
because that was when he stole second. There was an error that went to the outfield.
Oh, that's right. It was 6-6, right? It was 6-6.
That's right. And,
that's right. Because as I was watching the highlight, I knew the final score obviously, and I thought, they must have scored a run with the next batter, and then Cleveland tied it, and then they went to extras.
Right. No, it was tied.
No, it was tied, and then there was a 2-run.
That would have been the go-ahead. It was. I tell you what, I lived in Chicago for 17 years, and I never, ever thought I would see this day. And I've had a little love-hate with the Cubs fans because they've supported a losing team for a generation. they didn't really, because there was no will to win. It was the biggest bar in Chicago. It was always a good time to go.
Yeah.
And people didn't care. Harry Carey didn't care if they won or not.
Yeah.
But
and you're right
because
they were the last team to ever have lights.
Right.
So every game was played in the
Still
afternoon.
mostly in the days.
It was a party. So it was kind of a party.
It's the biggest bar in Chicago.
Yeah.
It's a great place to go. Great place to spend an afternoon, though.
So how do you think the market's going to react to the Cubs winning?
I don't know if the market's going to have much of an impact.
Doesn't care,
I bet there'll be a lot of dizzy people there this morning in Chicago. So if you're advisors in Chicago or you're lawyers in Chicago, they might be a little foggy in the morning.
So the market's not going to react to the Cubs, but it has reacted to the last week plus of the election.
Yes.
So what's going on there? What's that all about?
It's the seventh down day in a row here.
Yeah.
And there's definitely, there's definitely some tightening in the polls in this election, and I think that nervousness has been playing out a little bit. I really think that people look at this and these different scandals, and frankly, Trump has not created his own doom by talking that much about, or putting himself out there as a lunatic, but he's doing what he should be probably doing if he wants to win, which is let this thing play out, I think.
Yeah.
But it is playing out, and it is tightening. I don't know that he'll win. It's still, like you were mentioning about the Electoral College, and that it's it would have, something strange would have to happen for him to win, I think, at this point. But there is definitely a concern that he could pull this off.
Right.
And the markets are reacting to that.
So let me ask you that. So if I'm the average, it's an interesting situation. If I'm the average investor or the average voter, right, and Wall Street's reacting this way to the fear of Donald Trump, what does that mean? Like shouldn't that mean something to a voter? Like, we talk a lot about, look, I understand that we all want stocks to go up, right? Because inherently, we want stocks to go up because even if we're not big investors, we have 401ks, we have pension plans, we have something that's impacted by stocks going up. So, but on the flip side of the coin, we don't want to see the Wall Street elite get rich, right? We don't want to see. We want big business to be controlled. So we're all very we're bipolar in that way, anyway. But if I'm the average person, how should I feel about the fact that they're so heavily rooting for Hillary Clinton?
That's a great question because, and I don't heavily rooting for. I think the anxiety. I think it's anxiety that drives the market in this case. I don't know that it's rooting for. I don't know if it's a
right.
pulling interest because at the end of the day, and what I would tell people and what I do tell people is I don't think it's in the long term going to have a huge impact. Like you have to, people are like, what's going to happen Wednesday? We have to sell our stocks. We have to get out of the market.
Right.
And I don't think so. I think long term, I'm bullish on America, and I'm bullish on our process and elections and all this. And I think that we can overcome an administration no matter who wins, really.
Right.
I mean, that's how people are looking at it. You have to overcome, I mentioned before, we talked to 10 people. 5 are really can't imagine Hillary Clinton as president, and 5 cannot imagine Trump as president. They're serious about it.
So here's the big difference, though. The big difference now, and this is what people have to consider, and maybe they're okay with it, or maybe that scares them a little more. The selling point for Hillary Clinton is that she will be held in check by a Republican
correct, yeah.
Senate and legislature, right? Whereas Donald Trump looks like if he were to win, he walks in with a mandate.
Yeah.
Right. And we talk about the Supreme Court. So let's talk about that a little bit when we get back, and what you kind of see for the market in the next couple of weeks in general, right? The win or lose, whoever wins or loses. Sean Monahan, our financial guru, back after this. Hey, welcome back. Wake Up with Jeremy Grunin and Sean Monahan, our financial guru. So tell me this is like everything else. Tell me this is insecurity of the markets, right? Because of the unknown, and that the election's going to happen next week, and no matter what happens, things are going to normalize. Tell me that's going to happen.
I think that's going to happen. Right. I really do. I spend a lot of time talking to people about their portfolios and bracing for different scenarios. And I ultimately, fundamentally believe that earnings of companies drive the returns in the stock market. That's a basic tenet of what I believe, along with a few other things. And I don't think that outside forces, whether it's a storm, whether it's an election, whether it's a crisis of one sort or another, does not long term determine how the markets are going to return.
Right.
So
it seems counterintuitive, though. I mean, the Republican candidate theoretically is supposed to be for less government and for less regulation, right? And so that you would think would be better for Wall Street, but it seems in this case. Donald Trump seems to be very, very set on digging in, rolling up his sleeves, and fixing things because that's his wheelhouse. You know what I mean?
Yeah, and I think that. But people, you said the markets are against. They're not. It's not a pulling interest. It's sort of a, because I do think that the people probably, if they read the newspaper, would look at it and say, okay, the markets are down. This is just another. There's further alienation there, right? The big wigs on Wall Street are trying to rig this somehow or whatever, and they're against the little guy, and I'm the little guy, and I'm getting hosed here, and everybody else is making money except me. But they, it's not a rooting interest, but I think the anxiety, I think the problem is really, if Trump does win this, I'm not sure that people feel comfortable in what he might do. I don't think they really know. I don't know what the policies would be, and I think that that's a concern. I think that for better or worse, another Obama term, you know what you're getting. You know what it is. It's not like this. We are. The markets are higher, much higher than when he came to office.
Right.
And the people have done. I mean, stock market wise, have done well for the last 8 years.
And and as you pointed out before, so much of the money that's in our stock markets now is foreign money, right? So the foreign money is actually more scared than the folks here because they look at it and they get drips and drabs of information, and they see wild man Donald Trump. Right, and that makes them very scared, and that makes the foreign money say, "Ooh, maybe I need to pull out for the time being until I see what happens." Right, and so I think once the dust settles, I definitely agree with you. I think.
I mean, are you selling all your stocks this week?
No, we're doing the opposite, right? Because we've talked about that also, right? We're looking for opportunities. We're looking at what we could actually invest in because it's become more of a value today.
Right. There's opportunity. I mean, what creates wealth also is this volatility, and if you can stomach the volatility, you can deal with it. Then you can come out on the other side and make a few bucks. But if you're trying to guess, it's very difficult to do. And then B, it's just not a good long-term strategy. I think long-term, I think we'll look back. You could, a couple of years from now, we'll be, we probably won't even remember what happened in the market this week, right? But everybody, the anxiety is real. When I'm talking to clients and other friends of mine that are advisors, there's a real anxiety about this election. And I think, I think that's where the media is at fault here. I think they've created a lot of this. I've heard you talk a little bit about the media and the way they're positioning things, Fox, the New York Times, whatever it is. But the real crime is, I think that they are fostering this anxiety in people.
When we come back, we talk about interest rates because we had some interest rate news yesterday and some projections for December. And let's review what that means and wrap it up after the break. Is that cool?
That's great.
Cool. Sean Monahan, Wake Up with Jeremy Grunin, our financial guru. Back after this.
Wake Up with Jeremy Grunin. News Talk Radio WOBM AM 1160 and 1310. Live from Town Square Towers at the heart of the Jersey Shore. Wake Up with Jeremy Grunin. Get up, get out, do something. Join the conversation. 732-505-1160. News Talk Radio WOBM AM 1160 and 1310. Listen online at WOBMAM.com.
Hey, welcome back. Wake Up with Jeremy Grunin. It's 7:35 Thursday, November 3rd. It's 57 degrees, getting up to 78 today. WOBMAM 1160 and 1310 News Talk Radio. Streaming live on the Radio Pup app. WOBMAM.com, 732-505-1160. Had a caller ask to talk about the gas tax again, which we will do in the next segment. So hold on for that, and I'll kind of try to break it down, that constitutional amendment for you again. So that we can all be on the same page. So, Sean, we were talking about the Fed. Right. First of all, a good news that a federal agency, actually said they don't want to participate in the election.
It would have been unusual if they had. I guess they've only actually raised rates before an election or immediately before election once in 2004. So it would be very unusual if they had done it. There was always the possibility, and who knows what that would have done to the markets and. But I think that would have also been a surprise.
But isn't by them saying that we're not raising interest rates and by hinting that they are going to do it in December, doesn't that do the same thing? I mean, what's the point?
You know what? I don't know. You know what? I wonder sometimes, and I think I might have mentioned this on the air. Like they didn't used to have press releases. They would just raise it. They would just do it, and all of a sudden it would factor in, and people would figure out that they did it. And I don't know, there's this push to be more transparent and have minutes published and who thinks what and how many people on the board think this or that. But the reality is, I kind of wonder if just wouldn't it be better to do it the old way and just put it in a put it in a black box and then when they raise them, then they just raise them.
Right.
I mean, they have to go up. They are at historical lows here. any reasonable person would say, look, I don't know if it's short term, mid term, long term, the rates are going to go up in this country. The prevailing interest rates will go up. And, I do get concerned. We talk a lot about the stock market. The bond market is one area where I think that, man, we haven't seen that really. And people, there's been a safety in bonds except for one little glitch a few years ago where they frankly, Bernanke didn't even raise rates. He just said, hey, we're going to stop doing the qualitative easing. And everyone went, because he's going to stop doing qualitative easing, which was the whole point when he rolled it out that they were going to stop doing it when the economy stabilized. He says that. Everyone goes bananas. And then, you have, but other than that, if you've been a buyer of bonds, you've done well. You haven't made a lot of money interest rate wise. And I don't know if you saw this, but the other day, I mentioned this off the air. Austria issued a 70-year bond for 1.5%.
Wow.
Intergenerational almost, right? I mean, 70 years at 1.5%. I don't know, for love or money. I guess if you're in Europe where the negative interest rates are really taking hold, 1.5 seems like a great deal. But could you imagine buying that?
No, that's crazy. That's
like to say it out loud. Think about that. Yeah, I just bought a 70-year 1.5% bond.
No, I mean, because for me, I'm going to be 113 years old, and I don't know what good that maturing of that bond is going to be.
Yeah, not so much, right? And then and what kind of investment is that? Yeah. It's a horrible.
No, because I don't know what I would buy at that point with it. I mean, at 113, I mean, what are you buying for yourself?
What are you buying for yourself, right?
I mean, a new pair of diapers, a new set of diapers. I mean, what am I doing? What's the point?
Right. It's almost like sticking it to your kids to do that.
Yeah. I mean, the one thing I will say though is what's interesting is that you talk about the transparency and whatever. I think the one good thing now is that you see less of these major fluctuations because everything's kind of built into pricing.
Right, it's already in there.
Right. Just like a perfect example is when any company comes out with earnings and their earnings are through the roof. And then the stock doesn't move, and you're like, well, why? They had such great earnings. Because that's what the street expected. That was already built in. Like, if they hadn't hit that would have been a problem.
Right. You still get glitches like you had with Facebook, right?
Yeah,
we talked about
absolutely.
Where it's like, okay, they have great earnings, and the stock got pummeled because they thought they should have been greater, or they thought they might not be doing as much
because they made a comment after that said, hey, listen, we just want to ease expectations.
Right. So now it's baked in at 6% lower.
Exactly. But now what's going to happen when they actually show those expectations is that it's already going to be built into the stock price, so you're not going to see that fluctuation. So it's a double-edged sword there.
Yeah, I mean, if you think about back in the day, you used to have to go to the library to get information on stocks.
Yeah,
you know what I mean. Now, for better or worse, everybody, sometimes I don't think it's always better, right? Where people have all this information at their fingertips and they become experts. But you used to have to really, if you wanted to buy a stock, Jeremy, you had to call somebody that covered that stock.
Yeah.
Or you had to go to the library or call the company. Right. And order annual reports.
Or like Michael Milliken.
Yeah. Or
no,
quarter of the bond
Ivan
market.
Boesky.
Yeah.
No. Okay.
Guys.
All right. Well, I mean, they
weren't
always
the average either, though.
No, I guess not. Sean, the average person on the street, we know what they should do. They should call you.
They should.
So why don't you tell them where they could reach you?
They can reach me at 609-693-3800. My email address is Sean, SEAN, at FINALT. That's short for Financial Alternatives. Right. Our office is locally located in the corner of Indian Hill and Hooper. And if people have questions or concerns, there is definitely a lot of anxiety out there right now, and it's a good time to sort of be looking at all this stuff.
That's Sean spelled the right way,
Correct
SEAN.
way, yes,
And so go Cubs. And let me ask you, so you're on a cleanse, is that correct?
Yes, and I think you should have Jason from Ocean Organics on the show.
What are you cleansing? I mean, is this like a diet
they call
thing
it
for
a cleanse. You know what I've been doing is what he does is puts together these 3 days of juices, 6 juices a day, and so I just
Do you not
periodically just 6 juices.
You're just juicing.
Yeah, I'm telling you, if you did this, you would be.
I would be what?
You'd feel great.
Why are you saying I don't feel great now? I mean, how do you know how I feel?
I played golf with you. No, but
wow. No, that's different. That means looking great.
That was a hot day.
It
was a hot day. It was a little.
So I'm not in great shape. That hurts Jeremy, Sean. That hurts Jeremy.
It's organic juice. He puts them together for you. It's all natural. It's like eating 50 things of vegetables.
Well, there you go. Sean Monohan, not only responsible about your money, but responsible about his own personal health and well-being.
It's a constant battle, my friend. You know that.
Wake up with Jeremy Grunin. Back with more after this.
Thanks.